Hi, Chris. Thanks for having me. I'm Scott Hartley, co-founder and managing partner of Everywhere Ventures, based in Los Angeles, although our firm, as the name alludes to, is everywhere.
So what's the backstory? How did you guys come up with this?
So Everywhere Ventures started as a founder community in New York City. So 2017, 2018, we saw that basically the building blocks of New York City, if you were a pre-seed founder looking to raise that first round of institutional capital, at that time, there still wasn't really the kind of angel investing topsoil that San Francisco had of repeat company founders, repeat product managers writing those first angel checks. Still at that moment, people were running around to Wall Street, pitching lawyers, pitching McKinsey consultants, and the like. And we said, if we were to able to cohere a group of founders in New York City into one sort of entity, one vehicle, we could really build this founder-driven venture capital model. And so what we pioneered, which was then called the Fund New York, was about 50 founders and operators in New York City pooling capital, with a few of us making the decisions to deploy those resources as a fund into the next generation of founders based in New York City. Then when COVID happened, as New York is such a global city, we started to feel that pull, to places like Los Angeles, London, Berlin, Sydney, as people sort of emigrated back home or left New York City at the kind of jumpstart of COVID. And we basically felt the pull of our community go global. We already started to feel the deal flow kind of going global with, a Brazilian founder based in New York saying, hey, I've got a colleague based in Sao Paulo. Would you guys want to take a look? Or I've got a colleague based in Jakarta. Would you guys like to take a look? And so we felt, the pulling at the seams of this global community in New York City. And we decided at that point to change the name to Everywhere Ventures, which is kind of where we are today, which is really a global community of founders, about 500 founders and operators as limited partners across a number of our funds, with about 300 portfolio companies at this point spanning the globe. I think we're technically in about 30 different countries as far as where our companies are based.
So do you help individual founders that are LPs to deploy their money, or do you collectively deploy all of the money as you see fit as a single sort of source of decision making?
Yeah, exactly. So we're a traditional fund. It just so happens that our founders and operators are mostly our limited partners. So the capital is pooled into one entity, one vehicle. My co-founder Jenny Fielding and I deploy that capital around the globe, and we typically write $50 to $250,000 pre-seed checks. So in the first kind of institutional round of capital, typically that round, it moves around a bit, but we've seen kind of over the last few years typically about $1 million to 1.5 million, maybe $2 million pre-seed round. That's typically pricing kind of in the say $6 to $10 million post-money range.
So what can you tell us about the funds you have at your disposal? Do you have one fund that you're investing through right now, or do you have multiple, or how
Yes,
have you structured that?
we're currently investing out of our second institutional fund, so Everywhere Ventures Fund 2. We'll be deploying sort of the last third of that fund through the course of this year. So we're still actively looking for founders across primarily what we call the table stakes economy. We think about sort of the resilient future, and primarily make investments across fintech, healthcare, kind of future of work, and then what we call infrastructure.
And do you have some examples, and maybe some names we might have heard of, or founders that you back that we know of, or anything else that you normally highlight as a
Yeah.
success case study?
Absolutely. I mean, one of the early companies that we backed out of New York was a company called Headway. Headway's gone on to raise multiple rounds of capital from Andreessen Horowitz and many other kind of big Silicon Valley names. That's a marketplace. Originally was a marketplace for finding a therapist, which has then sort of moved down the stack into all sorts of ways to do insurance lookups and kind of at the infrastructure level of healthcare. Another company that came out of New York is one called Pair Eyewear, which is really innovative American American made snappable eyeglass frames where they've developed partnerships with all sorts of leading entertainment companies from Harry Potter to the Major League Baseball to kind of all the different sports leagues where little kids to start could have snappable frames and replace Golden State Warriors one week with Harry Potter frames the next week. That company was backed by Javelin Ventures, followed by NEA and Prism Capital. So a few companies like that focus on supply chain, focus on fintech, focus on healthcare, and are primarily in the origins of kind of the 2018 to 2020 cohorts. Those were all New York-based companies. Now those companies really are from all over the world.
So thinking about fintech in particular, obviously I know you've invested in a broader space than that, but thinking about fintech specifically, what is your current thesis? Like, what are you looking out for? What gets you excited or interested?
It's a great question. Across our portfolio of about 300 investments, kind of thinking about the pipeline of a lot of these deals are coming from this founder and operator network that we have kind of as our limited partners, as our LPs. We've actually evaluated about 12,000 companies over the past 6 or 7 years. That's sort of refined down into a funnel of about 300 investments. And kind of from a top level look at which of those investments really touch fintech. It's about 85 companies. It's about 25% of our portfolio, I would say, are kind of self-identifying or in some way, shape, or form are fintech-enabled companies. As we all know, fintech has really moved down the stack of many parts of many businesses. Many businesses claim to be kind of fintech oriented companies. I would say when we think of the vertical of financial services, we kind of think of a few different layers of the stack. So we think of kind of infrastructure layer technologies. We tend to think of sort of defensive layer technologies, which may be things more like cyber or identity management or KYC, things that are on this sort of defensive layer. Optimization sort of layer of helping allocate capital to places that may be underserved in some way, shape, or form. And then kind of what we call the behavioral layer, which is really the application layer. And that may be something that's a little bit more consumer facing. So, of those four layers, I'd say three of them are really kind of core infrastructure or under the hood layers around, new payment rail systems. Maybe that sort of fiat to stable coin to fiat, on ramps and off ramps that enable better cross border payments. That would be an example of an infrastructure type company. For sort of defensive companies, we have a number of different international KYC or identity management platforms looking at fraud or looking at really, I'd say one area that we're pretty excited about. I would think of a sequence of events where you have, banking as a service, or you have sort of the infrastructure layers that were built, a few years back, which then enabled a number of consumer-facing neobanks to launch in all these different developing markets. So you had, David Velez obviously make the foray into Brazil, launching Nubank, and then he was followed by many, many, many others across the world. We've backed some of those players in places like Africa, looked at some in places like Southeast Asia. But the flip side of the neobank expansion has actually been a lot of people that were not part of the formal economy becoming part of the formal banking economy. And then, of course, there are a number of security risks associated with that. There's a lot of nefarious actors that then prey on people that maybe aren't as financially savvy and are opening a bank account for the very first time. So the flip side of kind of the infrastructure layer development was kind of neobanking rise, followed by now a security risk rise of need for more digital identity management, need for more KYC, things like that. So that's one area that we're really focused on right now, I'd say, is thinking about cyber, thinking about cross-border security risks, thinking about identity management. So we're an investor in a company called Smile ID in Africa, which is focused on KYC and identity management. My partner Jenny was an early investor in Alloy, which did that in the United States. So we think about those sort of B sides of the record or flip sides of trends where, if a lot of people are chasing one particular trend, we try to take a step back and evaluate what that trend, where it may be going. And then what are some of the alternative ways to kind of capture value or monetize that trend? So one of them, I think right now for us is kind of that defensive layer of thinking about identity management, KYC, and sort of risk and fraud.
So, for a lot of entrepreneurs, like getting hold of an investor and getting through to maybe a term sheet can be a little bit of a black box. How do you guys filter? You kind of explained you had over 10,000 coming in and only obviously a few hundred actually receiving investment. On a high level, what does the gates or stages look like on your end from getting that initial contact through to, here's the term sheet?
It's interesting because one feature that we sort of utilize when we're trying to help one of our portfolio companies raise follow-on capital is something that we call surround sound. And if an investor is hearing from that particular company in a number of different channels that are all trusted sources, those lead to kind of a higher validation for that investor. And similarly, that's kind of how a lot of deals move down the funnel for us. And so I would say to an entrepreneur that's looking to pitch everywhere, or any of our peer sets at the pre-seed stage, is find a trusted inroad. Look at sort of who might at that firm. How are you connected to one of the members of the team at that firm, and getting a warm introduction, and really sort of working that warm introduction, and then maybe getting an introduction from a few different sources at the same time, and really sort of helping that investor understand that you're able to kind of validate, through their own network of trusted sources. I think that's one way that you can really sort of jump the line. We have invested straight off of our website. We receive hundreds and hundreds of unsolicited kind of pitches and doc send links, every month. We have written actually 3 checks off of random LinkedIn messages, but out of 300 companies, that's a 1% hit rate versus a 99% hit rate, which is not that you're somebody's best friend from college, but it's that you've networked your way into a trusted set of inroads, and then created the surround sound for yourself to kind of generate validity and generate trust with that investor. So it's not that you have to have gone to a certain school, or you have to have known this person for 20 years, but it does signal, if you're able to network your way into a trusted set of networks around that investor, that you're going to be able to sell, you're going to be able to hire. It's an early indication of signal strength of how you're going to run your business, and how you're going to build into a market where you may not know everybody, right?
So you said you've obviously gone through quite a few companies to find the ones you ultimately invested in. You must have seen kind of the good and the bad and the ugly across the whole spectrum. Are there any sort of highlights or any recommendations to founders thinking about, perfecting their pitch or approaching you or someone else? What would
You know,
you just say to that?
a couple points. One is we took a contrarian stance a while back that every pre-seed founder should have a financial model. And the Twitter ecosystem exploded in sort of rebellion against this notion that, how dare you be able to predict your whole future in an Excel file the day that you're starting as a company. And it's not about predicting or selling, but it is about being prepared. So we say it's not about prediction, but it is about preparedness. So I think the way that you can think through your business, think through all the assumptions, model it out, not so that you're trying to, completely go from A to B, but so that you're prepared for all of the different junctures or things that could happen. You have a sense of where to go. You have a sense of how to react. So one sort of contrarian viewpoint that we have is, build a model, think about all the inputs to your business, really flesh it out. And it's not that you have to follow that 5-year plan, nor that your investor is expecting you to follow that 5-year plan, but it does help you kick the tires on your own assumptions and where the business could go wrong or where it could go right. It may even point you to opportunities that you might not have foreseen before. So that's one thing. The second thing is really bringing your A game and a high cadence when you're starting the interaction with your investor. And so one thing that we find is, from the first pitch call to negotiating pro rata rights to finalizing the term sheet and to wiring the money, the way that you run the process of getting the investment is indicative of how you will act and operate as a CEO. And it's that the time between commitment and wiring is still sort of an evaluation. And so one thing that we have seen over the years is the way that you deal with conflict, the way that you have debates, the way that you sort of interface with your investor is really indicative of how you're going to operate your business. And so treat all of that as sacred. And from the very first call to the very last bit of the closing, really be transparent, really be above board, really operate with integrity and a high cadence and a lot of energy. And those are all the things that your investor are really looking for. We call it sort of our heuristic is a fast founder versus a slow founder. And this is something that could take 2 hours that instead takes 2 days or takes 2 weeks will make us walk away from a deal. And so something that we really believe is that the higher cadence that you're solving problems, you're going to encounter problem after problem after problem as a founder and as a person, right? And the way that you sort of problem solve and the way that you are direct in conflict resolution, the way that you're direct in sort of jumping in and attacking that problem is really going to be indicative of your success as a CEO. And so that's something that we really look for, is that preparedness on the financial model and then the cadence as a founder.
Okay, makes sense.
Yeah.
So looking ahead then on the fintech scene in general, it felt like it kind of came out of nowhere like 15, maybe 10 years ago. And now it's sort of become a little bit more mature. Everything has sort of been seen in a way. And you mentioned Africa earlier. It seems that a lot of fintech that was sort of innovated in the West is now kind of being cloned and reappearing in kind of emerging markets. Do you think fintech is as hot as it used to be, as trendy? How do you think about that? How you prioritize investments going forward, or how should founders think? Is fintech really the place to invest my time and effort right now?
It's a fascinating question. I mean, I think if you really sort of look at the globe writ large, there are different sort of different instantiations of fintech in different opportunity sets in different geographies. And so, what may be relevant in Brazil or Nigeria or another market, may not still be an opportunity ripe in the United States. And so, I think really depends on geography. It really depends on where you have a comparative advantage as a founder. So where is your network? Where is a problem that you deeply understand and where you can apply some of these? I think for a lot of people, there really is this kind of business model arbitrage that moves, west to east and east to west, and being able to spot trends that may not yet have arrived in the geography where you have a comparative advantage. So we do see a lot of business model arbitrage cross border, particularly being in a pre-seed investor called everywhere. So we do really look globally. Although, I would say that we're still seeing really ripe opportunities in the United States. Those opportunities have shifted from being sort of the first movers that might have, been possible 10 or 15 years ago to now. For example, we backed a company called Spade. Spade is really providing kind of layer two, more enriched data around financial statements and sort of the data that you can pull through API and sort of help build more holistic understanding of what transaction data looks like. So of course, people might have said, "Oh, that opportunity was taken by Plaid and by other players in the space." But we believe that kind of startups are of vintages, and so almost like a wine. A 2015 vintage is quite different than a 2020 vintage is quite different than a 2025 vintage. And there are, layers of technology. There are different architecture sets. There's different technical debt. There are different things that enable you to attack a problem from a completely different vector. And so we really, as a high cadence, high frequency sort of investment platform, we think of geography and vintage as two vectors of, if we're backing a company, maybe it's in a completely different geography or it's of a completely different vintage, and there may be a completely different opportunity set. And so we really evaluate those separately and think of those with regard to the comparative advantage that might exist today with kind of new technology sets or with this particular founder that may know the market in a new and different way.
Scott, thank you. That's a fantastic insight. Very exciting stuff. I look forward to following you guys and what you invest in next.
Thanks so much, Chris.